Hi everyone, come on in, make yourself comfortable. We're going to get started in about 30 seconds. Hi everyone, come on in, make yourself comfortable. We'll kick it off in about 10 seconds. All right, well, thank you for joining us. Welcome to your November webinar. My name is Jeff Thurecht. I'm a director of Evalesco and AAN, and I'll be your host for today. I'm really excited to be joined by the amazing team from Australian Ethical live in the office today. So welcome to you all and thank you for joining us. Australian Ethical is one of the leading fund managers and investment specialists in the ethical investment space. So we're in good hands and you're sure to learn a lot today. With me is Quyen Dam, who's the Senior Manager, Advisor Relationships, and also Deana Mitchell and Mark Williams, who are both Equities Analysts and Portfolio Managers with Australian Ethical. So thank you again. So today we're going to be talking about environmental, social and governance, ESG, and digging into what all the fuss is about. Before we get into the conversation, I'd just like to let you know that today, as an attendee in the webinar, you are on mute and your camera is turned off, so we can't hear or see you. So feel free to move around and talk amongst yourselves. But we do encourage questions. So as you can see on the screen, if you click on the Q&A tab, you can type in some questions and we'll check those as we go through and perhaps answer them on the way through, or I'll make some notes and we'll get to them at the end, time permitting, but we do value that engagement as well. I'll also let you know that what we're talking about today will be primarily broad concepts around investing, some specific stock stories, but we're not providing personal advice today because we're not taking into account your personal circumstances. So if you would like to know more about how what we've spoken about today may be applicable for you, please get in touch with your advisor or myself, and we can take you through that in a bit more detail. So this is a rough overview of what we'll be speaking about today. We're not going to be going through this point by point because Quyen, Deana and Mark have lots of interesting information to share, but we're going to cover off these topics in general. So without further ado, I'm going to hand over to Quyen to kick it off and start the conversation. Thanks, Quyen.
Thanks so much, Jeff. Thank you, everybody. It's a pleasure for myself and my colleagues, Australian Ethical team, to be here with you today. Before we kick off, I just wanted to open by acknowledging the traditional owners of the country which we are hosting this webinar on today, the Gadigal people of the Eora Nation, and we recognise and celebrate their continuing connection to land, water and cultures. We pay our respects to elders past and present, and thank you for the protecting country since immemorial. So I'd like to start off today with a bit about Australian Ethical. At Australian Ethical, our purpose is to invest clients' money and create positive impact. Our founders were ahead of their time. They were courageous and visionaries. They believe that private capital, if it's being allocated in a meaningful way, can change the world for the better. So over our 36 years history of investing, we have been able to prove that we can invest for positive future for planets and the inhabitants, and at the same time provide positive returns. So I think as fund managers, we have a tougher job than other traditional managers because we don't just take the traditional fundamentals approach, but we have to also look beyond that and invest in new territories, new future building sectors. So with that in mind, we make positive investments into clean energy, which supports the transition, medical solutions for the aging population, recycling and sustainable products for a circular economy, which pays into the mega trends that we see come through this today. So we, on the other hand, avoid investments that harm the environment, products and produced by exploitation of workers, right, and child labour. We believe that there is financial risk in investing in companies that are associated with these activities. So let's take a closer look at how we come here to be here today. So let's just have a look at a bit of a history lesson here. So what we're seeing is that at the turn of every century, we see new industries develop. So what does the term sustainable revolution refers to? It's a term described that a variety of developments which lead the way for increased productivity of processing, which then moves the economy. So through history in the 1800s, we've seen the modernization arose of agriculture that leads the way to increased productivity on the processing of food. We then had the Industrial Revolution in the 1900s, which we saw steam power, electric power, and mechanizations of industries replacing manual labour. So at the later half of the 20th century, we saw digital technology create more efficiencies, which change how we work and live. Information technology as machine learning, artificial intelligence, and blockchain. What we're looking at now is managing information in a way that was not imaginable in the past. So today as a business, there's more ways of doing business in a sustainable way. So we have seen private capital being invested in the alternative energy like renewables, electric vehicles, innovation of technology, sustainable products. So the current economic model is unsustainable and it must be changed. So from our perspective, this leads to what are the drivers in the growth for investing. So from our perspective, we are looking at, in Australia, we have 43% of professionally managed assets in some form of responsible investing style. We're seeing that investors are wanting to take part of the green transition and invest in areas that don't play a part to creating threats in nature and biodiversity. What we're also seeing is now we have a global platform of the internet raising awareness on calling out bad companies and banding together to create collective action for change. So those are the key drivers. And then, clients are obviously living a more sustainable life in the way that they decide to eat non-cage eggs, they recycle. So it's a mentality now that's translating and aligning around how they allocate their investments. So there is now the opportunity to do so, where in the past that could be something that, their personal preference. So from here, I just wanted to share some stats around what investors are seeking that, we kind of see that money's flowing into this area and what are the key drivers, but what are investors actually looking for when they're searching up or speaking to their advisors. So we've got some stats around here which shows that, the three leading top are fossil fuel, human rights, and animal cruelty. So essentially, there isn't much of the price for fossil fuel. On the back of the December 2019, where we had the horrific bushfires, from Australian Ethical, we do have a retail super fund, which we saw an influx of clients making a stance and moving their money from funds that have fossil fuel exposures and moving it into us, which they can channel capital in a way that they want to create change. So from the other perspective, the human rights concern, there's a lot of concerns around when you think about human rights, there's concerns about modern slavery. So what regulators have done is that they've required a lot of companies now to report on that, the top ASX 100 companies, and we've played a part in supporting that reporting around the modern slavery and exploitation of workers' rights. Australian obviously has what I read the stats a little while ago, maybe about 6-8 months ago, that we've got the highest rate of vegans in Australia, across the globe. So there's no surprises that people want to invest in companies that don't want to cause unnecessary harm to animals. So with all that coming together and clients searching for the way that they can allocate money to create positive change, there's also the other side of the changing landscape to responsible investments from a particular asset requirements. So what we've seen is that in the recent election, there's now climate policy that's passed through. So the government's now, we don't actually have a clear pathway, but there are measurements and pathways that are putting together. We've got private companies now coming together, and then you've got the underpinning demand of now clients wanting to decarbonize, looking at investing in circular economy. So that's the first wave. The second is around increased scrutiny on a lot of funds that's coming to the market. So it's around greenwashing that opens up opportunities for new money investing into certain companies. So there's new companies that could be new to the market, creating new innovative technologies, but then it's important to also look at the risk with that as also opening up the capital opportunities. So it's important that there's a lot of navigation around this. So we're here to support your advisors, and Jeff and the team are here to support you to sort of uncover all that.
So can you tell us a bit, what does greenwashing mean?
So greenwashing is essentially a label that a fund can say that they're having great environmental considerations for the way that they invest. But looking under the bonnet, they could still have certain nasty companies that don't associate with the labelling. So that's why with a lot of products, which I'll go through in a moment in the greenwashing section, which talks about now why the regulators are now ensuring that the labelling isn't just this labelling. You have to be able to substantiate your claims around, if it's a portfolio that are looking at reducing their carbon emissions, like us, we're wanting to reduce carbon emission of our portfolio versus a benchmark to 0 by 2050. How are they going about measuring all that? And are there external auditors coming in to get a second external view around that? So there's a lot of scrutiny happening around that, and there could be fines coming on the back of that. And then with all this being now more transparent, super fund members of industry are calling out super funds, which I'll give examples later. But then, so that was just talking about the evolving framework that we have to measure on the claims that we substantiate in terms of how we want to invest. So if it's a clean energy fund, how does that look like? So that's leading into what I was referring to. So at a fund level, it's important with the greenwashing and the labelling, it could just be a marketing exercise. So these are the 7 key points that, it's good for you to have on your mind when you're considering investing in this particular style. There's also your advice team that can support you. But, it could just be that, for example, how are these, companies, how are they reporting on their ethical stewardship? They can talk a big game about climate, but how they're voting behind closed doors. My point earlier around lack of credible, independent data. So making sure that, if they say that they've substantiating their claims on the carbon reduction, how is that being done, essentially? So I've got some stats here which talks about, it's a tricky line because you need to, promote your product, but in a way you need to make sure that it's in line because the regulators are going to come after you. So, the recent headlines was that UniSuper was challenged by their members for their investment in Santos. Now, that's not a bad thing, but the situation is that UniSuper has failed to adequately examine the net zero emission reductions claims by the company. So that's the extra layer that, the fund manager should need to be actually looking through under the bonnet, examining and questioning. So it's not a bad thing to be investing in BHP, but how they're moving the dial around their environmental policies, for example. Recently as well, one of our biggest Australian super fund, Australian Super, was called out to say that they've got 4.2 billion of their members' retirement savings in gambling industries. So that's another factor to consider. Sometimes companies have good ESG credentials, but does it really mean that they're good investment if it's investment that you're wanting to invest, which does it align with your values? So, for example, companies that's listed on the Dow Jones Sustainable Index, are really, they're on there because they've got really good sustainability reporting, because they've got a great, marketing team supporting them. But, we've got really questionable companies like Star Entertainment, Newcrest Mining, for example. So it's just really understanding, looking under the bonnet around there. So with all that in mind, and the greenwashing that we spoke about, so what should a good responsible investment look like? So from our perspective, so I'm talking from our framework, we look at the three levers. So we look at channeling capital to future building sectors, into companies that are sustainable, and take capital away from companies that we feel that are not contributing to a better world. The second lever, so not through the investment, but the second lever, we have to also engage and advocate for change, because we can't move the dial and maybe not move it quick enough to accelerate the transition if we don't have those engagements with the companies, and we don't. So not just from a voting perspective, but also from attending AGMs. So our ethics team doesn't have an active engagement policy where they attend AGM and call out companies around their climate policies and commitment. We've done work with companies that we don't invest in, for example, Woolies before the Denver split, where they were underpaying their migrant workers. So we called them out on that. We engaged with them, and then they've since then looked at their their pay policy for the migrant workers. And then the other part for us is always, you have to measure on what your claim is. So if you as a client have chosen to invest in a responsible manager, you want to know that it's achieving the outcome in line with why you've decided to invest with them. So I'll just hand over to Dee just quickly to talk about our governance side of things, because as I mentioned, we do participate in the votings for the companies that we hold stock in. So with that,
I might just hone in on that engage and advocate section on the middle. So engagement, Quyen talked about that E and the S piece, but engagement is also an important facet of the governance oversight that we partake when we're investing at Australian Ethical. So what does the G mean to us? It means two parts. It means voting and engagement. And an against vote carries more influence when we have active engagement and dialogue with the board members in terms of achieving outcomes. So we're able to voice our concerns on performance, strategy and oversight when we interact with board members. So last year, for example, we voted on nearly 5,000 resolutions that span our international and domestic portfolios. And by the way, we publish all of our voting records on our website. It's a publicly available document, so we are very transparent in the way that we vote. We are active voters, so roughly 1 in 6 resolutions we voted against last year. And the reasons for why we vote against companies varies. So just taking our sample set from last year, about 30% relate to board governance and remuneration. So what do I mean by that? So the board oversees the strategy and monitors the performance of the CEO and the executive team of the companies that we're investing in and the execution. So we want to ensure that there's an independent board representing shareholder interest and an effective board that is creating long-term shareholder value. Another 60% relate to ESG concerns. So these again vary. And it's an all-encompassing, so gender inclusion, climate and human rights. Quyen mentioned something that we're doing on climate resolutions. We do have holdings in Santos and Origin, and we hold nominal shareholdings in these companies, and we voted at these AGMs for advocacy reasons that we can share our voice on climate. So we're actually in the middle of peak AGM season at the moment. So I've certainly had a few chairman meetings this week and continue to kind of be very active in this space. It's very important. Yeah. Remuneration is a really focal area for us as well. We spend a lot of time on executive remuneration because at the end of the day, it is a driver of management behaviour as well. So it creates vision and outcomes from a board level and feeds that down. So this can be a kind of contentious area. And if it's not kind of crafted correctly, it can lead to the wrong outcomes for long-term shareholder value. So these are really important issues for us.
Yeah, absolutely. I think it's that's a great overview, because often when people think about ethical investing, they just focus on the environmental impact or the E and the S, but the G, I think, from the way you explain that, then would be all companies should be considering these things, whether they're ethical investment or whether they're a green business or whatever it may be. So it's really important, and I think it's becoming more common to see that sort of advocacy and engagement around that, which is, I think, for the better. But it's great to have you there with your professional expertise and knowledge of the broader market. I think can really add a lot of value in those scenarios. So that makes a lot of sense, and I think adds a lot of value to our clients' portfolios.
Yeah, so as Dee mentioned, that we do hold nominal holdings for even companies that we don't currently invest in. So it's a lot of work that we get involved into to kind of shift the dial in that respect. So just to summarise this before I go into a little bit about our process. So really long-term benefits for ethical investing is essentially, investing in sustainable companies that are future building. You're making a impact to real world outcomes. And I feel that with this new sector and the transition, a lot of money will flow into, capital will flow into this area. So it's a great opportunity for, the next decade or so for, alpha generation in your portfolios, which your advisor would, provide that advice. So it is, again, future-proofing your portfolios, because as we see with the transition, there will be old world types of companies that, if they don't move quick enough, will be at risk of stranded asset. It will cost them more to change their business model. So, that's important. And the other part is corporate engagement. So there's other ones, but I won't highlight that. So our approach, just really quickly. So our company, as I mentioned at the beginning, was formed over 36 years ago. And to support that, we had a principle-based framework, which is called the Australian Ethical Charter, comprised of 12 positive and 11 negative, which stacks up nicely, with the 17 Sustainable Development Goals, which is put together by the UN. And that really helped us assess companies back then to decide if they are positive, first of all, and then we outweigh that with the negative. And as through the passage of time, new industries emerge and new issues with that come along. So what we had to evolve the framework, and then we developed a industry and issue framework, which makes up of 30 of them, 30 industries and issues. And sitting underneath that are 200 product and services that we analyse. So there's a dedicated ethics team that does the initial screening process using that framework. And we draw on external independent data like scientific data, academic, government, NGOs to help us assess the company based on our framework. So we're not just using our internal framework, but external inputs to that process. So once that process is done, the stocks falls into the investable universe, or you can call it the sustainable universe. And then that's when our team here looks at it from a fundamental bottom-up stock selection for the fund that's in Evalesco AAN's portfolio. So with that, I'll pass on to Mark to talk about portfolio and stock discussion.
Okay.
Thanks, Quyen. So I just want to talk a little bit more about the investment process specifically, and then we'll talk about some of the sectors that we invest in and a few stocks as well. But this slide here really just shows that the way we think about our investment process is, like Quyen mentioned, we have a separate dedicated ethics team, and they really set the investable or that sustainable universe that we as the investment team can play in. So you've got that circle there. We then apply specialist knowledge to certain sectors, and those sectors are the ones that we can play in through the ethical charter. So that's healthcare, technology, renewables. And we really believe that if you specialise in certain sectors, that's really where you can add value and drive investment return. So we're applying that specialist knowledge. We look for market inefficiencies, and probably the best way to describe this was not all stocks that come through our ethical screening process will automatically go into the portfolio. So we're looking for the best stocks, the best ideas within the thematic that we believe can help us generate alpha. And so probably a good example of that, just to highlight, in the healthcare sector, obviously CSL is quite a big stock. In our active portfolios, we don't hold it. So we're benchmark unaware. We don't have to hold something, even though it is a big stock in the index. And in that sort of particular case, we've held the view that valuation's always been a bit stretched, and so we tend to invest in other things within that sector. But we do, like Quyen was saying earlier, we sort of try and apply this patient capital. We tend to have a pretty low turnover type of philosophy, and really looking at over the long term what we think can deliver us the best returns, the best alpha within the portfolio.
So just alpha, what does alpha mean?
Alpha means to us, obviously, generating returns in excess of what you can get from investing in the broader market index returns. So, that's where, if you look at our long-term track record, and particularly some of those funds that have been in place for a number of years now, and as Quyen said, we go back quite a long way. And so what sort of guides us there is that, we're obviously looking to beat the market, and that's even in the context of applying our ethical screening universe. So we're trying to offer our investors the opportunity to do better than a market return while still having this ethical screening component to it. So that's what we're aiming to do, and the funds historically have done very well from that perspective. I will say the last 12 months has been a bit more challenging given our style of investing, and so, as you can imagine, resource sector and energy sector performing quite well. So that's been a natural headwind, because that's not somewhere that we tend to have much in the way of exposure to. And then in the last 12 months, also some of those more growth type of sectors, healthcare and technology, have also been under a bit of pressure there, particularly as rates have risen. And so the last 12 months have been more challenging. But again, we sort of go back to historically how our funds have performed. I think maybe on the next slide there, Quyen, just to highlight this, is the Australian Shares Fund, which has been in existence for a number of years. And you can see in that blue line there. So while there can be periods where there can be bigger peaks or troughs compared to the market at the time, but you can see that long-term performance, and that's what we're really trying to deliver for clients, is over the long term continue to deliver outperformance and alpha against the broader benchmark. So that's what gives us confidence now when we sit here today. Despite some of those headwinds, we think if we're operating in those sectors that have natural growth opportunities, healthcare, tech, renewables, we think over time they're going to continue to deliver really good performance. Just moving on to the next slide, just to give you an idea of the types of sectors that within this ESG thematic that we think about. I've mentioned a few of those that we tend to invest quite a lot in: healthcare, information technology and utilities. So you can see there, when we compare our portfolios, which are in the light blue to the index, you can see those sectors tend to have quite material overweights compared to what the broader index offers. And on the opposite side of the spectrum, energy and materials, those carbon intensive sectors, and even in consumer, we tend to be quite underweight the broader index. So we're going to touch on a couple of those sectors today. What I would say, just before I launch into a couple, we'll talk about utilities, renewables and technology specifically, but just around materials, historically, and this is the resources sector, it has been quite challenging for us to get exposure. But our ethics team is looking at looking at some of those companies, looking at some of those commodities that we believe do play in that decarbonisation, clean energy space. So we do invest in a little bit of lithium. Our ethics team is looking at copper and nickel. I think we'll probably get through there in some respects. They've been looking at Fortescue as an example of a company where iron ore wouldn't naturally get through our ethical screening process, but obviously the focus on hydrogen going forward and their net zero targets that are really driving the industry. So that's a specific company that our ethics team is looking quite closely at.
And what's driving that, I guess, decision or desire to look at, that sector more broadly?
Well, I think historically it's been an area we, as a investment manager, we haven't focused on quite as much, but obviously there are opportunities, and particularly with that decarbonisation focus that is, particularly in the last couple of years, is really becoming hugely important. And so, therefore, it's important for us in terms of allocating capital looking forward to areas like in lithium, which we need batteries to power our electric vehicles as more and more people shift towards that. And so I think it's that mindset of really thinking about what's important from how the world is going to decarbonise and what types of commodities can help us get there. And so that's a bit of a lens. But, it's not the sole focus. So Fortescue, for example, we like a lot of things they're doing, but also some of their Indigenous relationships and how they interact with the local communities. That's a huge important factor when thinking about mining companies and will we invest in them. So that's also important. It's not just the commodities that's been focused on.
Okay.
I'll just dive quickly into the utility sector. This is where we get our renewables exposure. First comment to make would be in the ASX, unfortunately, there are not many opportunities to get exposure to renewables companies, and that is a bit disappointing. The last one we had here was Infigen. That was acquired by, Infigen, a wind power operator that was acquired by an international company, Iberdrola. So there is really slim pickings, unfortunately, in this particular sector. But we can invest in New Zealand companies, and in New Zealand, the broader electricity network is about 85% renewable. There's a lot of hydropower, wind power, geothermal. So we get our exposure there with some really good, strong companies, the likes of similar business models to AGL, effectively, but just for the renewable generation as opposed to coal and gas that we typically have here in Australia. So one of those sectors, obviously, we see a lot of growth opportunity. Again, that decarbonisation theme is really going to play strongly for that, not just over a couple of years, but this is over multiple decades. And so we think there's great opportunities there. I'll touch on a stock quickly here, and then I'll hand over to Dean. She'll talk about the technology sector after that. But if we just go on, just to highlight one of those opportunities, Contact Energy, it is a stock out of New Zealand. They have 85% of their generation is renewables. Like I said, very similar gentailer type of business as AGL, so they have retail power customers. We like it because that decarbonisation theme, there have been a lot more policies in place in New Zealand. They're a lot more progressed than Australia is, and they're continuing to push further forward. And as they decarbonise the economy, the electricity generation is going to need to almost double from where it is today over multiple decades. And what you're seeing is companies like Contact Energy now building new generation plants. So one of their key ones is Tauhara. It's a geothermal plant. I was over there a couple of months ago with one of our other portfolio managers, meeting with the management team and seeing this asset being built. And it's just a great example of new renewable generation coming to market because the market needs it, the price signals are there, and so the investment is going into the country. And that's what we want to see, obviously, over here in Australia as well. So we like the thematic on Contact, but we also like it because it's a really good business, free cash flow generative, has a really good balance sheet, and from a valuation perspective, we think there's good opportunity, good upside as well. So it sort of fits that thematic, plus those types of stocks where we have a little bit of a value mindset around the investment theme, but obviously looking for what we think is the best stock sort of within that thematic.
Okay.
I'll hand over to Dee to talk quickly about the technology sector and a stock update there as well.
Okay, thanks, Mark. Look, technology does feature as an investable sector generally in terms of ethical reasons, but it also fits our investment criteria importantly. So we're sector specialists, in particular in software. So from an investment perspective, software businesses are scalable businesses, high gross profit margins, and leverageable businesses. So when you have with sticky enterprise customer bases, these businesses should be able to deliver healthy EBITDA margins and deliver revenue growth over the longer term. Valuations here are at very interesting levels. This is evidenced by the number of private equity interests that we're having in the technology sector at the moment. There's been Nearmap, Nitro, ReadyTech. There's been a number of private equity approaches on some of these beaten down names. There's also strategic interest. So there are strategic interests, speculation on Tyro, another smaller company called PropTech. There is a lot of interest in the space at the moment. And the consistent theme with these companies is they have sticky customers, critical software, and repeatable revenue. One of the stocks that we do own is PEXA in the software space. They've digitised the property settlement process. They're delivering strong cash flows. They have a strong defendable market share. And banks and conveyancers have got this into their workflows. And at these prices, we think there's free optionality for shareholders on the PEXA doing the same thing in the UK. For years, they've been doing their homework in the UK, and they've worked with a packet to get that ready. I might finish off there and pass it back to you. Thanks, Jeff.
I'll just finish off just quickly, just one last slide. So this is the SMA portfolio that we manage that's within the sustainable funds here. And just to highlight the types of exposures you're getting here. So this portfolio is very large cap oriented in the SMA environment. You want to make sure liquidity is important. So we've structured this portfolio with regards to that, and we have a liquidity profile within the portfolio and the stocks that we choose. We do aim to limit rebalancing and turnover on this to keep trading costs down, but it really sort of gives you a bit of a blend of that quality growth and yield stocks as well. So, broadly, the portfolio offers around a 4% yield, but we do have some of those growth, some of those technology, renewables, healthcare names that we've talked about as well. So I'll leave it there and hand back to Jeff.
Yeah, so I think just looking at, you're holding 15 to 30 stocks, so it's fairly high conviction. You're not having to go out and, as you said, buy 100 stocks just because there's 100 stocks out there. So that allows you to be fairly selective and, as you said, patient with what you're owning there.
Yeah.
I think it's important maybe just to sort of point out at the moment where this fund fits within the overall portfolio. So within the AAN Sustainable Growth Fund, which is the portfolio we put together a couple of years ago now. It is a diversified portfolio with a number of managers who specialise in different areas, and we've partnered with Australian Ethical in a couple of those areas. And this is one of those key to look after. And I think what you've heard from the team hopefully gives you a lot of confidence that when it comes to Australian shares, particularly, they're the experts and we're in good hands in that space. And then we have other people who are looking after international shares, some of the fixed income components of the portfolio as well. It's interesting. I find the mining conversation particularly interesting because it's one of the ones that I think when people first give a higher level sort of view of ESG, mining might be one they naturally could put across through. But I think the evolution of what we're seeing in that space, as you articulated really well, Mark, is really important for us to consider. I think it's a really important one from an Australian perspective because it's such a massive part of the Australian economy, isn't it? So to just totally ignore it seems a bit counterproductive.
No, that's right. Yeah, and I think the way our ethics team thinks about things as well is there are frameworks that they apply, but there's always a natural evolution to applying those frameworks as well. And so the process, broadly speaking, is even if a stock is removed from the investable universe for some reason, it's not out forever. There's always, if that business changes or if there's different focus or whatever it might be, then there is that opportunity for those things to change. Likewise, if a company comes through the ethical screening process, if something changes within that company, then they might be excluded. So it's always that type of review type of process. And I think that's probably a good example in that material sector, that resources space that, we obviously think some of those areas, some of those commodities are very important to decarbonisation. So they're important for us to think about as an investment.
Absolutely. Got one question coming through, which is great. So keep those coming. We've got a few more minutes than we've got there. So the question, is there a publicly accessible document on the best to the worst company in Australia on ESG? That would be a question. There's probably a few people out there who've had a crack at putting one together, I dare say. But, how do you guys approach that?
There are different providers of ESG. So MSCI, for example, But if you are interested, actually, we publish all of the names of every single company that we invest in on our website. So you can use that as kind of a bouncing tool to have a look at.
Yeah.
And what about the worst ones?
So just adding on to what Dee was just mentioning, there's a lot of providers. So it is hard to just use off the shelf different ESG scores, environmental social governance scores provided by different providers, one of them being MSCI ESG, there's S&P, there's Refinitiv, because they all look at pull data from different sources and they all categorize companies differently. So that's sort of where the consistency isn't there. So that's why it's good to have a framework, in addition to all that information. There is go to your advisor, but there is also another website which you can go to have a look at, which is a Responsible Association of Australasia. Like the team here at Evalesco have put a lot of work into putting that model together. So they've got a lot of insights, and we've got information on our website around the topical concerns. There's 30 of them, as I mentioned, which we can share with the team here.
Yeah, I think it's a tricky one, isn't it? Because even just when we were working through putting our model together, different people have different views on what's the most important issue. So if you look at the best and worst, it might be, well, if you're really anti-gambling and that's your biggest priority, then you're going to look at Crown and Star and the like as being the worst performers in that space potentially. So it can be a little bit subjective. So, we took the view that we wanted to, I guess, cover the key issues that were coming up and screen those out. And then if there's other things, one of the good things that we can do in parts of the portfolio is we can screen out other industries in individual portfolios as well to a degree, which gives a little bit more flexibility. But that's an evolving thought process as well.
And I think it is really difficult as well. Like Quyen mentioned, there are outsourced providers that try and score based on data that might be available, but it is quite difficult. And that's where I think our ethics team internally, and there's, what have we got, 4 or 5? So it's a pretty well-resourced team. And I think that's because it is, to do this properly, you have to dig below that sort of high-level information that's out there and really look at a lot of different elements. And that takes a lot of time and effort. And so I know I'm very glad that I don't have to do that. And sort of as part of the investment team, that we have a dedicated team that can go off and do that work.
Yeah, sure. Another question coming through, which is great. This one might be for you, Dee, given that you said that you had had a number of meetings with chair people this week and involved at that level. Are we seeing an increase in female CEOs, and are they changing board focus on ESG?
Yeah, look, diversity is an area where we focus on. We have engagement with the board on diversity and diversity inclusion. I think generally we have seen an increase in female representation across the board, and we continue to advocate for that as well. So that's one of our passion areas.
And the second part of the question, do you see that has an impact on the ESG focus of the business, or is that an evolving piece anyway? Or
I think that's a broader evolving piece, and I think it's probably more of a gender neutral evolution in terms of the ESG.
Okay, but 2 more minutes, so 1 more minute if there's any other questions. Otherwise we'll wrap it up. Any last comments while we're seeing?
Maybe just a quick comment from me. Yeah. So, we are seeing the landscape changing from a corporatized, where reporting isn't required. So, ASIC is now putting a lot of pressure on top ASX 100 companies around their climate commitments. So that's a different, it's opening up a different door for us to be able to now look at companies. And where what Mark was saying earlier, where they weren't able to make it in, is now an opportunity for us to assess that as well. So not just internally we're changing our views, for example, around mining, but there's also external factors that contribute to a changing landscape.
Fantastic. Good. Anything else from my review? No, that's great. So as I said at the start, if you'd like to know more about how this topic might be suitable for you, get in touch with your advisor. We do have the AAN Sustainable Growth Model available, and that was built based on feedback from our clients. So probably several people on the call today, which is great. Something we're evolving and looking at other options. We do also have access to a range of other specialist funds and investment options within this space as well that may be suitable. So if it's something you'd like to understand further or how it may fit into your portfolio, please get in touch. As I said earlier, hopefully you're coming away from today with a great deal of confidence that whilst it is a very complicated, in-depth area, partnering with specialists like Australian Ethical and the awesome team there puts us in a really good position to be able to, I guess, achieve good returns and be doing good for our community and the world in general as well, which is something that we're very passionate about as our team here. So no more questions coming through, so we'll wrap it up there. Thank you, Mark. Thank you, Dee. Thank you, Quyen. Really appreciate your time and insight, and thank you for the work you're doing looking after our clients' portfolios. Really appreciate it. But at home, thanks for the questions and your engagement and for tuning in, and enjoy the rest of your day. Thank you.
Thank you. Thank you.